Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Friday, February 14th. Happy Valentine's Day. Happy end of the week. So, as always, I'd like to do a review of the week. We'll talk about performance for the week. We'll talk about a couple of these headlines that just hit. The 13F filings just hit, letting you know where funds positioned last quarter. Keep in mind all this information that comes out. They're kind of it's nice headline grabbers. It's nice to talk at cocktail parties, but as terms of like investing. This isn't really something is going to tell you where to put your money now. Now, some of these things get pops, like some of the big guys, right? So, big guys and girls, like Buffett, for example, everybody watches what he does. So, what did he do? Kind of interesting because I think when they say Berkshire Hathaway, keep in mind Buffett now has a lot of portfolio managers. He and Munger both have, other guys who are running a little bit of money too. So, they added two S&P funds. Why they did two different ones, I don't know. But IVV and SPY, they both added those into the trust. So you get the S&P one, and you also have the Vanguard one, which is IVV, which is cheaper. So I don't know why they did both. Maybe two different, portfolio managers who don't talk to one another. Don't know. But they also increased Restoration Hardware. I wanted to bring this up as an example. Right? Again, I'm always one of these guys who tries to take the other side of like some of the things that people that are sometimes popular thought. So remember this is when Hardware announced earnings. Well, this coincided with when they announced that Buffett took the initial stake. That was the highest this thing went, right? And so again, I give you this information, or I go over this information so that you don't take these filings and jump into a name just because some fund, even though it's Buffett, who's got a tremendous track record. I'm going to talk about Stanley Druckenmiller as well, who his filings are out too. But again, we don't know. Like they could be out of those positions by now. But yes, this is where he went in last time, and it got this big pop that day. And if we go to the 1 hour, you could go and you could see that. So it's getting a it's getting a similar move. Maybe not as big. They said that they added to it. So I think that's here, right? Was when they announced this, and it was right after earnings. It was like I think this was earnings. This was the day after earnings, and this is when they announced. So that marked the high of the stock for the quarter when it was announced that they got into it. So that's a good example of how to take this stuff. Uh, Basically, do not, in my opinion, right? This video is for information purposes only, not giving out any advice or recommendations. But do not trade off of this stuff, unless you happen to catch it in the after hours and selling it, because this is when it was announced, and the stock never got that high again. Now it set up a nice entry for us because I added this week. There was no filing out, by the way, that said that I added this into my portfolio this week, but a nice move. So I'm happy. I'm happy to be already in a name when big investors are announced in it as well. But Restoration Hardware did has done very well for me this week. All right. So, but again, I try to provide some value because I don't know. It seems like people on Twitter they're just trying to fool one another's. Uh, you know, there's a couple. There's a couple addresses on Twitter that basically they compile the 13Fs and so forth. But again, if you were to add things after these funds do, first of all, again, that you don't know that these funds are still even in the things because this is in the past. So the other one that I do look at is Stanley Druckenmiller's fund. Interesting, they added IWM, which has been pretty much a relative underperformer. They've also exited Visa, which has been doing really well. So you don't know if they're still in that. Of course, the IWM. They also added EEM, which I think was weeks ago because I think they've disclosed it back then. So yeah, 1.5 million shares. But again, you don't know if they're in any of this stuff still. JP Morgan, which I added to my portfolio this week too. I was thinking that value would outperform. It didn't really do that this this week. Like I said, I'll go over the performance for the week, but it's a couple of interesting names in there. I also saw didn't I say did I see Workday added to its holdings in Workday. Workday's been pretty has been performing pretty well. What about exits? 10 exited. Oh, they got out of Shopify. That's interesting. Okta, they're out. Intuitive Surgical. Wow. So they got out of a lot of software names. That was still in Workday, but that's really interesting. I'm going to post this in the room in just a second. But yeah, Shopify out. Right, decreased holdings, and their top 10 holdings. Looks like Workday is a big holding. Netflix is up too. So again, don't know when they added those, but so moving on. So what do we do with this crazy market at this point? Right, we were up 9 basis points. So let me go over this week's performance, and then I'll try to answer that question. That's a loaded question. What do we do with this performance? So really interesting. Some of the names, some of the areas of the market that performed well this week. So for example, jumping right to the sectors. Oh, by the way, and here's the overall performance. The Qs were up what almost 4% last week. They were up another 2.4% this week. So it's funny because sometimes on these lists you will see that one group will outperform one week and then sometimes underperforms the next week. Sometimes it goes up too much. But if you don't believe me about the solar names, this was the performance of solar last week. It was up 8.2%. I know I've talked about solar a couple times this week in videos, but man, that is strong performance. Up over what, 16%? And even with some of these names reporting earnings in there, in 2 weeks. That is phenomenal. The semis were up huge. Obviously, NVIDIA helped that. Applied Materials also had good numbers this week. The semis were up last week 4% as well. Remember, the semis looked like they were like one of the questions of the market. Not only me, but I saw others questioning that this thing looked like it was going possibly breaking down. Just funny how this works. Sometimes one day of price action can sometimes give you a false signal. Look at this false signal in the semiconductors ETF 2 weeks ago. Big red candle, closed on the lows, broke the 50-day moving average. For some technicians, that's like, oh, geez, that's a big no-no. This market's going to tumble. And look at what has transpired since. Back out to 52-week highs. Is that tremendous or what? So, and that marked basically the low. Wow, that is a tremendous. Uh, Let me go back to this week's performance. Oh, I'm in there. IGV had another week. Robotic stocks from NVIDIA's in there too. Consumer discretionary, even utilities in there. Internet stocks, tech, Chinese internet stocks all did well. Home builders up 2% for the week. What didn't perform? It's kind of the same names. It's kind of the same sectors. It really gives you a sense of you know what is working and what's not working. So oil and gas names down another 2.2% this week. They were also on lagging the week before. They did finish up in a strong week the prior week, but that was your bounce the week before. So I try to follow a trend following philosophy, and and if you're not familiar with that type of philosophy, two books that you could read. One is called Trend Trading, and number two is called Trend Traders. That those two books have really helped me and changed my philosophy around a lot. But I know a lot of people who are not necessarily trend traders have been looking at energy names, but they continue to underperform. And I got some questions in the trading room about a couple names today and this week that have been relative underperformers. Well, what's going on with this name? Why is it down? Well, because it's probably going back into the downtrend that it's been in for years. It just is what it is. It's very difficult for names to get out of downtrends. Once they're in downtrends, it requires a big, massive change for it to get out of a downtrend. So, like one name that comes to mind is GE, that's gotten out of a downtrend. And there's signs of that all along the way. All right, let's look at GE for a minute. We'll do a little bit of changing, but like for example, 2019, this was a stock that we were watching for a while, right? And it tried to get into value, the level to watch last year. And you probably, if you've been listening to my videos last year, we went over this a lot. But once it changes its dynamic, then you've got something different. But I see a lot of people that are always trying to go after names that are in downtrends, thinking that they have figured it out. It's really difficult. It really is. So GE, is has changed. You could have made some decent money from when this thing got above the 200-day moving average, and something as simple as that, like the 200-day moving average, is pretty key. But I know a lot of people who are looking, or who have, been looking for Gilead to turn the corner. I could tell you it's very difficult for these names. Now, it's been basing for a while, so it just may take a little bit longer. But some names, they just stay in downtrends for longer than you may want to particularly be in a stock. Uh, and there's a lot of examples of that. But if we go to energy, right? This thing has been in a downtrend. So why even mess? Like, the question is, right? And I guess what I've learned, and I'm not trying to criticize anybody, but why even go here? It's showing no evidence of turning around. Is it cheap? Yes, but it's been cheap for years. So what I would look for, like if this is something for you, right, where you're saying I'm looking for a turnaround in energy, for me, it would be like something where it's got to get into value for the year, 55.80, and then you've got something to trade against. But I think one of the mistakes that newer traders make is they think that they're going to catch the bottom in a stock. And what I've learned to do over time is not to try to get the bottom of the stock. Wait until it's given you a it's basically changed its something has changed in the stock, right? Just like GE has, right? GE spent a whole year trying to get into value on that weekly chart. Finally did it, and it's been working since. This thing would have to get above like 55.81, right? Somebody asked me earlier in the week about CVX too, Chevron. This thing is below value as well. So I'm on the wrong chart. Actually, this chart doesn't look that bad. It doesn't look as horrible as the other ones. But again, very sideways. Just very different than how I've been trading, and I just don't want to mess with something that's sideways for years. Like Amazon was a good example, right? Amazon has spent the better part of a couple years sideways. They missed 2 quarters, right? The context has changed at this point. Now, I would love it if this thing comes back and back checks a little bit, but here's your breakout zone. But this thing spent what, basically over a year going sideways, right? And then once it broke value 1922, it's been acting different all along. So would you want to buy it here because you thought you got it cheap? But if you did that, let's say you bought it at the absolute low in Amazon, right, which is down here. Like, let's say you bought it. Let's say you bought it on the absolute low, right around 1700, right? But you would have had to sit with this. So meanwhile, you could have been making money in other stocks all along the way, rather than wasting your time for a year in Amazon, right? Do you see that there's a cost benefit there? Um, such as like all the software names that were going berserk, right? I would have rather been in this that was doing this while Amazon was doing nothing, and then you could take your money out of here, and then you could go into, you know what I'm saying? So I just giving you some examples and some of the things that we're going over. We went over a lot of principles today in the trading room, because I think everybody kind of was in a little bit of the same boat today. Didn't want to add a ton of risk. We've seen these Fridays play out before. SPY finished. Did SPY finish down for the day? No. So we broke. So this is actually, we finished up 9, right? What did SPY do? Yeah. So this is a green Friday today. So there's been 5 out of 6 red red Fridays this would now, so we've got 5 out of 7. So a little bit better. All right. So so again, just going over, kind of a high level performance for the week. Internationally, believe it or not, China was the best performer. That I think that has to do with them stimulating, right? And I think even so, the thing that that just to kind of make an argument here for a second, like everybody is thinking that hey, things could get worse in China and so forth, but I don't think what a lot of people are thinking about too is if things get worse, they're probably going to have more stimulus. They're not letting anybody short sell now, but if things get worse and in the short term, they're probably going to announce some other stimulus. So remember, the market is, in my opinion, forward looking. Someone asked this question today. Again, all good questions. We had some great questions today in the trading room. They're like, when do you think the virus, when do you think companies it starts to get discounted? And stocks start to fall based on that. I think the market is already adjusting to it. And it seems like, if I'm trying to talk to the market and read its mind, the market is kind of thinking of this as like when there's a hurricane or when there's a big storm that happens and flights are delayed and so forth. That's how the market is kind of handling this right now. It seems like it's handling it in stride, and it's thinking of it more as a short term issue, not as a long term issue. Now, whether the market is right or wrong, that could shake out in the weeks to come. If this thing happens to spread more, gets worse and worse, then the market will probably adjust to that. But right now, I think the market is adjusting to this as it's a short-term issue problem within the market. And then the other thing I think the market is doing, again, in all my opinion, is that there's plenty of liquidity in the market. The central banks are injecting money, so that's also like if they were doing the opposite, like if they were decreasing the size of the balance sheet, then you might be seeing more of an effect. But that's not what they were doing. Like remember last year when the trade war was going on, and at one point they were decreasing the size of the balance sheet. They crushed the market because they were taking liquidity out of the market, and there was negative news on the tape. So right now, what the central banks are doing are essentially propping up the markets a little bit in times of duress. So I think that's what's going on, and I think also that's allowing people to think more of a long-term picture than what is happening right on a day-to-day basis with China right now. That's my take. So what else for next week? So what I've previously said is that Mondays have been greater than Fridays. Well, we have a 3-day weekend this week, so we don't know what that's going to bring. If there's going to be any new information that's going to be negative, I would be more. Notice that I say negative. Right now, I think the market is pretty much priced to perfection. Right now, right? We've been moving up. We're not as overbought as we were up here. Some technicians think that that's a negative, that's a divergence. Well, I don't know yet. We have to kind of see how this works. But what I've been doing is I have 2 portfolios that I manage, and one is in cash, and I've been making adjustments to that and riding the trend as it goes up, and which is doing very well. It's outperforming the S&P this year. And then the other, my short-term account, I'm being a little bit more tactful. This week, I think towards the end of the week was kind of tough for me. I wasn't trading great, with with options and so forth the last couple days, and that kind of hurt me a little bit. P&L not that bad. I'm just a little bit off. I mentioned the other day I was on highs of 2020. Now I'm a little bit off that, but not anything impactful. So, sometimes, if you've been facing that too a little bit, maybe not this week or, however, even though the market was grinding up this week, I didn't trade that well. I think I was probably trading a little bit too many options versus stocks. And, you learn, right, when that happens a couple times. Some traders in the room were doing exceptional. this week. They were trading things like SPCE. I did not trade this thing, but unbelievable move, up 20% today. That's really, if you just traded this all week long, congratulations to you. But I was in some other things. I tried to switch a little bit to the banks, and they didn't do anything this week. J.P. Morgan did not do anything. Goldman is still kind of hanging there. So again, frustrating. Like if you're in an option position for a couple days and this happens, you get beat up really badly. Because again, big difference. And I try to go over this in the trading room today. I try to go over it a lot. If you're in a stock position and it doesn't do anything, you're like, no big deal. If you're in an option position and it doesn't do anything, you have a loss on your hands because of the theta decay and because the stock's not moving. If you're in an option position and you're long, right, your long deltas, you need the stock to move. If you don't move, you lose the position lose. So big difference. So again, it's kind of where I screwed up a little bit this week. Putting on two option positions in banks did not help me this week. What else? And then a couple of things we traded today. I traded the CDLX, which had a real nice move today. It blasted off at the end of the day, and I got out of it. I just didn't want to hold anything to the last hour of the day today, but it did very well. Also, how did our so every weekend, right? Every weekend I put out a watch list. I put out a video for members. How did our portfolio do? This was the watch list that I gave members. We did pretty well, up 2.8%. So that outperformed. What did the S&P do this week? Was up 1.6% for the week. So the 14 names that I gave out as watch list names, I do like to review this at the end of the week. Finished up 2.8%. Amazon, which was our stock of the week. MasterCard was my other stock of the week, which was not in the watch list. I think I had. Did I have MasterCard in here? I did have MasterCard. Was up 4.3%. So the two names that I had, and I put out one video publicly on Amazon. Both of these names did really well. The one name that did poorly was AIG, which had a crazy reversal on earnings. I did not actually get into that one. Team was up 14%. Coupa Software was up 6% for the week. Again, these were all selected over the weekend. UTX was down. PG didn't do anything. Had a nice comeback the last 2 days. Because I am in that position. PayPal had a nice week. Saw some more call buying. Call buying twice this week. Today got hit in the first 20 minutes. CrowdStrike was up 4%. Lulu up 4.5%. HIIQ is up 10%. Unbelievable. When I put this on the watch list, I thought it was stretched in the beginning of the week, and it was up 10% after that move. And then Slack I added, which was up 21% for the week. Summit did not work out. So again, mission accomplished for the names that I gave members on Sunday. Really nice performance. What was the one name? Oh, yes. So if you're not a member, here's where you go. You could become a member here. You go to our products page and under the Elite Trader package. So again, I will be putting that out. I'm actually looking forward to, these 3-day weekends, sometimes they can't come soon enough. It helps me tremendously. I was talking to a trader about this last weekend. I see some guys on Twitter. I really question what the hell they're doing if they don't like getting away from the screens for a couple days. I feel like those guys are they're gamblers. If you can't get away from the screens for a couple days, it helps me tremendously to do some activity, to exercise. Even if you can't exercise, if you've got health problems, just to walk a little bit and get outside because it gives you perspective. The guys who I don't want to mention any names, but you know who these guys are. If they can't get away from the screens, they have a problem. So I think this market overall, I know I'm ranting a little bit in this video, but I think, I was going over the new high list. There's a lot of names that have blown out to the upside. I think what would be healthy after the last 2 weeks of gains, and a really nice performance, for this year, that not for this year, but for this month, in February. It's been, you know, tremendous the last 2 weeks. So this would be great if we kind of come in a little bit and digest. That's what I'm hoping for. And again, I've got one portfolio that is running. Not going to touch it. I've got 15% cash in that portfolio, and then my short term account. I would like to see a little bit of a pullback because I think buyers will come right back into this market. All right, guys, that's it for the weekend. Again, you can visit me at tribeca to become a member. Have a great weekend, everybody, and I'll see you on Tuesday.